Let's all take a poll though, guys. Who has the most gray hair? Oh, I know, Sean does.
That's actually by design. That's expensive. You know how much it costs to do that every week?
To create that.
That's serious bucks right there. Okay, Daily Energy Markets Podcast, Monday, October the 10th. Oil prices falling, would you believe, in Asia this morning after OPEC makes its big announcement last week. Let's welcome Omar Najia, Global Head of Derivatives at BB Energy. Omar, is it a case of buy the rumor, sell the news? Your thoughts this Monday morning?
I think basically this is going to be the last push up of crude that we see for a long time. But I think we get to, $100 on WTI, maybe even slightly higher than that. Maybe 105, call it. But after that, I think this is going to be an amazing selling opportunity. So we'd look for the market to rally some more, get to like this 100, 105, and then fall off a cliff, basically. Lose 50% of its value.
Let's welcome Peter McGuire, CEO of XM Australia. Peter, your thoughts on that? This market is going to crash regardless of what OPEC Plus does.
Well, Sean, I'd probably go along with Omar to a fair bit of horsepower behind it. Yeah, I think it's got the potential to probably take 105 out, and I think it's going to be fairly quick to get there, maybe a month or so, maybe a fraction longer. We've just got to wait and see, but there's a lot of uncertainty. We haven't even dialed in any geopolitical issues at the moment. That US dollar is 113. You've got Asia's been fairly heavily sold off today as far as equities. And I just want to see how China rallies over the next week or two, or if it does. And if it doesn't, then I think we're in for a little bit of a rout. We've got inflation coming out for the read this week with US, and it's going to be showtime. So, yeah, I think there's onward and upward for the energy sector.
Richard Radoglia, CEO of Matrix Global Holdings. Richard, we have the US economy still showing some great resilience despite the rise in interest rates. We saw better than expected job creation reports on Friday. Omar's call on the downward side here. There's still legs in the US economy, the largest in the world.
I think the U.S. of any place is probably the best off, right? Our two oceans continue to protect us. We have the best energy resources really in the world. Our problems really are we gonna take advantage of them? I'm not sure I'm as bearish as Omar is. I tend to believe that the market has the ability to go up. I've been thinking for the last 6 months or so that the problem with price was not now, or the balancing of supply demand was not now. The balancing was going to happen sometime in the middle of 2023. How long can Russian production stay high? How long? When are we going to start to see? Are we ever going to see 103 million barrels a day of demand? So I think the U.S. is going to hold on. I think it is an area where if there's going to be price pressure, it could come from the U.S. sector. The problem is money's not flowing into the U.S. sector. And I think I heard and listened to your talk last night with your guests kind of talking about what OPEC was trying to do, which maybe was being taken wrong in the sense that OPEC really is saying to the world, guys, we're only going to go to this much. After that, you need to be the ones to step up to the plate and start to produce more oil. And I think that's really something that where these high prices, if they think what Omar says they're going to do and they're going to fall like this, I think that puts the world in a more difficult situation down the road.
Omar, your thoughts, just to sort of extrapolate on your thinking there. Obviously, the upward momentum, you might say, from the markets at the moment, with the sort of shock decision, really, in some regards, by OPEC last week to sort of change the sentiment on supply concerns. But your downward, I know you've been calling that downward pressure has been on for a while, and it was clearly well underway. We saw Brent down nearly on 80 and WTI well below 80. It's recovered for some of the reasons we've seen. What do you think takes it back down?
So what we've seen basically, I think the trend is lower. So we've seen the initial push down. Now we're seeing a corrective push up, and then we're going to see the continuation of the downtrend. I think the American economy, I think the European economy is going to be decimated absolutely decimated. And I think, there's a lot of, American investments in the EU, a lot of multinational companies that get, sales in the EU. So they're going to be hit by, if you like, two things. They're going to be hit by lower sales, and they're going to be hit by an atrocious dollar-euro exchange rate. So the US is kind of protected a little bit, but it's coming. $31 trillion of debt is going to come home to roost. It's only a question of time. Again, the only thing that they can do in the Fed or the EU is basically print money. That's the answer to everything. So now the question is, what do? They keep raising interest rates. Interest rates at 3% don't really address inflation at like 18 or 20 or whatever it is. It just doesn't. So so I think basically you're going to see them raise interest rates, and I think the economies in the equity markets are going to come off, and I think they'll come off starting now. And I think oil kind of tries to levitate. I agree with what Peter was saying. Maybe we get that high, in a month, but not a lot longer than that. And then we're off to the races to the downside on everything, all asset classes, equities, Bitcoin, oil, all of it, credit, bonds, real estate, all of it.
Peter, we did see that on Friday, obviously on the equity side, sort of the attempts we've seen on the equities to rally in the post-summer period, got a severe cold shower on Friday. Your thoughts on the weighting, the sort of robust central bank policy now, betting in higher for longer, as Larry Summers says. How big a weighting is that on all markets?
Well, Sean, you're looking at the NASDAQ down nearly 4%, as you saw, and S&P nearly 3%. So, and that was continued with big sell-off in Hong Kong today and Australia well down. So that momentum is going to, I think, continue. I probably agree with Omar. I think there's a lot happening in around about 4 weeks and 1 day, which is the midterms. So they maybe try to keep things with an even keel up until that point, but I think it's going to be hard to keep it managed after then. We've just got to wait and see as far as that inflation read. I think everything comes back to that. There's so much fear in the market. And talking about Larry Summers, I just saw just a brief talk, and I'm sure everyone's seen it, but all of our viewers that haven't, Larry's words were he made a mistake cancelling the Keystone Pipeline. They made a mistake slowing down all kinds of permitting activity, and they made a mistake being hostile as a country for natural gas. Now, that was Larry Summers' words, not Peter Maguire's.
Peter, just to pick up on that, I mean, all of that may be true, but it strikes me that the real Achilles heel here, to the oil markets at least, is China rather than America or Europe. And we're coming up to a very big meeting. Obviously, the Communist Party meets next week, and there's a certain expectation that, finally, once that's out of the way, China will be back to the races, and that could be a very significant push to the demand side. Your thoughts on that sort of China Achilles heel to the commodity markets and the outlook beyond the Communist Party Congress?
Well, Sean, everything's cheap compared to oil. If you're looking at all the base metals, they're ridiculously cheap. Grains are a different matter. There's some of those that are all points of the compass. But if you're looking at base metals to start with and what it costs as far as energy, coal and iron ore, then it's very, very good for China at the moment as far as cheap. They've got the US dollar to contend with. But the other side of it is, where are they with that property sector? Is it starting to unravel? I listen to so many different voices and views and analysts, but I think eventually one day it's got to unravel, and it may be unraveling far quicker than what we can estimate. And that's the real Achilles heel of China.
And the world, perhaps, if indeed that was to unravel like we saw in the US in 08, 09. Richard, I mean, Looking at the OPEC Plus decision, I know you have been been sharing your views with OPEC Plus over the last few years as being a very definitive new actor in many ways, a more muscular actor. Your thoughts on their decision? Is there a clear market argument? Do you take their market argument? Obviously, the Western media took a very political narrative away from the decision, but just looking at it purely from a market perspective, looking forward, have they made the right call in your opinion?
I think they have. I think, and you're right. I've kind of been on this for the last 4 or 5 years. To me, OPEC Plus is a sea change from what we've ever seen in the historical moves of OPEC. The combination of having meetings that are in very short order, their ability to understand supply demand in real time, and basically the entirety of the OECD countries telling them that their oil is not wanted in 10 years from now. A logical response is, okay, then you're going to pay for it for the next 9. So I understand this idea that the market can collapse, the demand can fall. Did we not just see OPEC cut production a significant amount to kind of get the market back up again? To me, I've looked at this kind of going from a rational perspective. Fully, all cards on the table. I did not think that Russia was going to invade Ukraine. I don't think Omar thought it. Peter, you might have thought it. I know I did not think it was going to be the case because it was rational. It didn't seem rational for them to do. I've kind of come to this thought now and thinking, let's look at these things rationally. Where does logical thought take us? In the body politic and in energy policies. So let's look at what's happening rationally. Yellen wants to put a limit on Russian oil prices. She's a PhD in economics. That's not rational. That's ridiculous. The German energy minister comes out and says he criticizes U.S. companies for charging too much for natural gas. Well, we know rationally the German cut coal, cut nuclear, right? They put all their eggs in the Russia basket. Is that logical? Here in California, we have Governor Gavin Newsom, who now wants to put an oil profit tax on companies to say they're stealing people for they're gouging. U.S. in California has put in policies that says you can't have refineries. We have the most expensive reformulated gasoline in the world, and we have the highest taxes. So rationally speaking, if you're talking about the market collapsing, which is possible, I don't disagree. What Omar just said about all that, about debt, I am fully on board. I think we've printed our way into oblivion. The question I have, which is different than what we've ever had before, which is when there are high prices, there's a supply response. There is no supply response anymore. The bank have decided they want green hydrogen and ammonia. That's where they want to go. And I would also say that if OPEC Plus believes that the market is going to be under pressure because of demand, what's a 2 million cut? Why not a 3 million cut? Why about a 4 million cut? Let's put a floor on this thing. And if the problem is, and this is really the issue I see, one of them, Tony Blinken comes out and says that the attack and sabotage on the Nord Stream pipeline was a tremendous opportunity. That's where foreign policy hits oil policy. And in my mind, I could see prices trading down as a function of a meltdown in the world, but I would give a little more credit to OPEC and OPEC Plus and their ability to hold prices.
Omar, we missed you last week at our forum in Fujairah. We'll get your excuses at another time. But the big topic that your peer group were sharing last week in terms of their concern, their outlook, was much more about volatility and liquidity, the absence of liquidity and the too much presence of volatility. The flat price, what it was somewhat irrelevant to them. But those two things, particularly the thin liquidity, big threat to the market. Does this action by OPEC Plus address any of those two principal issues that you and your peer group are facing?
No, I think basically whoever's talking about, if you talk about liquidity on physical markets, forgive
the absence
me, but who cares? Yeah, but who cares? Honestly, we don't. It's like a tiny little drop in the ocean to
yeah, but it's also in the paper markets, right?
Well, the problem with it is in the paper markets to some extent, but you can always execute. It's not an issue really. It's just that the price is moving so much because nobody really, there's a lot of fear in the market, right? And nobody, there aren't any strong hands. There's no kind of strong belief. So nobody believes that we're going to go straight up and get to new highs, and nobody believes we're just going to basically dump from here. And we're coming to the end of the year, which means nobody wants to risk their P&L, et cetera, et cetera. But, I think, there's a lot to what Richard says. But I think, and we did think about it, but I think the bottom line is the following. If there is going to be fear in these markets, fear is going to make people, because strategically you want to be long oil, right? So what we're talking about is we moved from $0 to $130 on WTI, and probably we're going to move from 30 to let's call it 60. But that is a correction of the trend, right? So longer term, we're going up. So strategically, you've got to be long energy, long oil, all this kind of stuff. But obviously, you can't really make money trading by looking at things, 10 years down the line or 5 years down the line or even 3 years down the line. In the immediate term, what we're looking for basically is fear. And when you have fear, you have people basically selling everything. So just like when COVID happened, you don't look at, is this a good company, or is this a good, are commodities cheap, or are equities okay? No, you just basically panic and say sell, right? Like Richard, remember when everybody used to be on the phone and you'd be like, where's the market?
Or on
It's
3
100.
phones.
Where's the market? It's at 100, sell it. I missed the 100. Where's it now? 95, sell it. Where's it now? 70, sell it, fucking sell it. So that's what we're looking for. We're looking for a short-term kind of panicky a bad situation in Europe with energy, bad situation in terms of people on the streets, bad situation in terms of the midterms in the US state, political, I don't know what, pressure to the downside, market comes off, and then a good buy opportunity, but
Peter,
not right now.
Your thoughts on that? I mean, ultimately, Omar is signaling there that this is a market with no clear sentiment direction after so long of having one. The one sentiment, the one kind of North Star, like we had at the beginning of COVID, we have now, and that's the strong dollar. It's the one kind of clear line of sight, if you like. And to a certain extent, it's holding, and to a certain extent, it's holding longer, or I'm not sure, I need to check the date on that, but it feels like it's holding longer than it did at the beginning of COVID, where the flight to safety gave the dollar a very big boost. Your thoughts, what topples over the dollar, or does anything in the foreseeable horizon?
Well, Sean, it's the best of a bad bunch, and the bad bunch are very, very ugly. So you've nearly got a 146 as far as yen. We understand what happened to the pound in the last 2 weeks to today. Have a look what's happening. We're nearly at 96 for a euro. So I think that from a 113 standpoint for a US dollar index, everyone's saying there's 116 going to be the line in the sand over the next week or two. And I think it's got the momentum. Once that inflation number comes out and everyone goes, wow, are they going to hit 75 basis points or 100 basis points for Fed Chair Powell in November? If that's a bad number, then I think it's off to the races. And he's told us the storyline, and that is ratcheting rates aggressively. So we've just got to see how they manage that inflation story, Sean, because I think that's the animal that's the dangerous animal in the room.
And dollar, Peter, from your view, keeps moving with that until such time as rates plateau?
Well, I think so, Sean, but we've just got to get to when they manage the inflation story, and if the energy sector continues to ramp up over the next month or so, then let's get through the next month and we'll get an appreciation of where we are. It's very hard to forecast at the moment. We're asked that all day as far as news media, and boy, oh boy, you can be wrong by $10 in a day.
Richard, we do have to, I think at this stage, and I think for a long time, maybe the market and others were less willing to call it, but the Fed holding the line of, tackling, wrestling, killing, whatever they need, sledgehammering inflation. Do you believe it? As Omar says, 2 or 3% in rates, while painful from zero, it's a big move, but ultimately it doesn't knock over 20% inflation. Your thoughts on the resilience and the determination of the Fed to see this through?
He's giving all a sense that he's going to continue kind of on maybe not on a Volcker path, but he's continuing on. There's no out. The out is maybe a complete washout in the equity markets is probably his only I'll pause right now. And Peter's exactly right. The yen is effectively just not going to go anywhere. There's no reason for it to rally. And the euro. What's going to happen to the euro? I mean, the euro is going to look at the U.S. and even if we pause rates, what is going to happen to the industrial sector of Europe next year? How does the euro even gain any value whatsoever? And so I think that we'll continue to see a push by Powell. He said it. He seemed to be saying it in a dramatic fashion. I think he's getting some cover now by guys like Larry Summers and others are starting to give him some cover from the left, which is what he needs. I don't think Biden and those guys have any idea what to do. So I think he's looking to the other kind of thought leaders on the Democratic side, and they're giving him cover now. And I think that's the path that we're going to be on. There's not many outs for us. 31, as Omar said, we have 31 trillion in debt now. At one point, everything comes home to roost. I don't know when that is, but I think we're probably looking at higher interest rates. The effect
when
on
people
demand.
stop buying dollars, that's the day that the chickens will be slaughtered in the henhouse.
That will be the day.
Let's go to the survey question which is actually a repeat of yesterday, because we wanted to get the Monday morning quarterback's view on the OPEC plus decision. So if we could bring that up, there were many reasons given by OPEC for the 2 million barrel a day cut on quotas, but what does the market think the biggest reason is? OPEC wants $90 floor on Brent, remove volatility, improve liquidity, weaken Biden and the West, which, because of a lot of the media coverage, was this was a political decision, not an economic decision, or the sort of easy answer, all of the above, perhaps. But which of these do you think sort of describes the OPEC want the most? And welcome your views on that. Omar, beginning of the week again, Monday morning, big developments coming in the immediate future. Obviously, the Chinese Congress Party with the coronation of Xi for a third term. Where do you think, I mean, we've seen, surprisingly, one might say, the market come off this morning, given not only the OPEC decision, but the bombing of the Crimean Bridge over the weekend. So you've got geopolitics and OPEC, and yet this market wants to go south. Your thoughts on the week ahead of where that, will you get a definitive direction of travel, do you think?
So a couple of things. First of all, OPEC, the reason why OPEC plus cut, in my opinion, is because Russia knew that with these sanctions coming, they had to reduce production anyway. So what a great idea. We've got to reduce production. So let's go to OPEC plus, tell them, look, we cut 1 million, you cut 1 million, we get 2 million. Very simple. That's one. Two, you look at the dollar index. The dollar index, the high is 114.78, I think, 114.78. So we think that the dollar index is going to set a new high above 114.78, come back down, maybe test something like 110, and then go and set new highs towards 118. What does that mean? It means maybe even 120. What that means is the dollar is expected to go higher. And when does the dollar go higher? Dollar goes higher when people are looking for a safe haven, when there's fear, people are scared, all this kind of stuff. So that is why we think that equity markets are going to crumble. That is why we think basically that the energy is going to come off, et cetera, et cetera. So I think, I mean, the deepest markets are the currency markets, deep markets, biggest markets in the world. They're sending a clear message. And if you can't hear it, the euro's trashed. The GBP is going below parity. Dollar yen is trashed. That is saying people with, the biggest market in the world is telling you, look out below, right? So that's why we think what we think. Biggest markets in the world, we listen.
Peter, the point taken by Omar there, and it's only as you say in previous comments, the next month will reveal. We are we're coming to mid-October. Winter is coming. We got the Chinese meeting next week. We have the U.S. election a few weeks later. The clarity of the direction of travel seems to be emerging, and from the point of view of how bad winter will be for everybody, right? Not just the Europeans, because Asia has to pay the same LNG gas prices as well, with less money and less dollars. Your thoughts on where the direction of travel comes from, that to set that sort of clarity forward?
Well, building on Omar's point, this is the issue that you've got, because once things start to tank, and I think they will tank sometime after the election, then that's going to cause much concern. And it's going to cause concern that the safest haven, as Richard said, is that friendly US dollar. So that's where everyone's going to be focused. Equities, I think, will really come under pressure. Certainly the other currencies, they're ugly, and they'll only get uglier. And the only market to play at that point in time, and that's why it'll go trend higher, will be that US dollar. So that's where I think everyone's focused from a trade perspective, Sean. They're looking at some of those key determinants and realizing the game they're playing is long dollar.
What about the Chinese yuan? Because it is also under some pressure. Where does the new Chinese government post October 16th go with the defending of the yuan, managing the yuan? Yeah,
I want to see how. I think we've got to get through the next week and a half to determine where we are on that, because there's too many moving parts that only they know. If you think through a lot of analysts say, do you believe the numbers coming out of China? I want to see where China is in the next 2 weeks and what's released to the market, and then we'll get a better understanding of where we see the yuan, because I think it could be a rocky road for those guys as well.
Peter, just to quickly follow up on that, is there any, obviously granular, usually when the US president chooses a vice president, like, Trump picked Pence because Pence is close with the religious right, and gave Trump cover across that sort of market, etc. There's a certain extent that who Xi brings in to the Politburo will give some indication of the direction of travel on economics. Your thoughts on that? Will you be looking for that? Will it be indicative, or is everybody the same color?
Well, I think in a lot of ways there will be some rumblings, and everyone's got a personality, and there'll be someone that Z picks. I mean, you always want someone that, in case from a getting hit by a bus standpoint, you want to be a key person. You want someone that's going to fill the breach that you're capable of, or they're capable of doing that for you. So yeah, I'm just again working through that, seeing how it all folds, and I'm not expecting any real surprises.
Okay, Richard, last word. Let's get the survey result and see where $90 Brent is the target here, clearly defending $90. Mike Muller said the same yesterday, that's what it looks like, given where they, made their comments in August, then came out last week with the big bazooka. Can they hold it there? Can they hold it above 90 through the winter, do you think? By just managing tightening supply?
Absolutely. I mean, I think, I'm not for as us old gray hair people remember, back in 1986, one of the first reasons that Saudi broke from it and caused the market price to fall from $30 to $9.75 was they took their production from 11 million barrels to 2 million barrels. They were the only swing producer in the game. So can OPEC cut price or cut production to keep price high? Absolutely. I think it's absolutely something they can do, and they can continue to do it to a level that you could just use a calculator. If I produce 8 million and the market's 90, am I better off than producing 9 million and the market's 60? It's not a very difficult calculation. What I've after being off this for a month, what I do find remarkable, though, there's not been one word about Ukraine. There is no war going on. I did mention the Nord Stream pipeline. No word about that. I'm not sure you've done this, Sean, but I'd like to get a poll on people's thought of what happened to that Nord Stream pipeline with 4 underwater explosions all at once. Is there something different going on in this world? This is not a real, this is a different game we're playing, everybody. I think this is really, really different. And I don't think this is
100%.
something, this is not something we've seen ever. We've never seen it. You know, what we have is John Kerry telling the IMF that they're not allowed to invest in natural gas in Africa because they need to have solar power. The world is upside down. And if the German minister's mad right now about getting high prices for natural gas, he's going to be less happy when Biden decides to stop all exports of products. That's going to go over real well in Rotterdam and in South America. So we talk around the edges here, but I think what we're talking around is a wholesale change in who runs the party now. And I think that it's not Russia. Russia is what they are. It's not China. China's debt is probably so great that we can't even count how many empty buildings and cities they are. I think it's probably a complete what's the guy, emperor with no clothes. The U.S. is the place. If the U.S. fast-tracked all U.S. production, stopped the Jones Act, built 6 LNG export plants, we would dominate the world. We would absolutely take over. We would control, and I think that's where we could head towards. But unfortunately, John Kerry doesn't want to do that, so we're not going to.
It's very sad. I suppose the reality of this Monday morning of the weekend and the weekends of before is that clearly critical infrastructure is on the target list, as it has been in the Gulf in recent years. We're seeing it now in Europe, whether it be the pipeline, the bridge, the nuclear power plant in Ukraine, what else, you know. In essence, the who is behind it is somewhat irrelevant, other than it is clearly on somebody's target list. And one would say maybe the early days of that, when one is in a proxy war or a war where the opposing sides do not want to shoot bullets directly at each other, the triangular war is underway. There will be a reaction to the Crimea bid. You can be clear of that. I suppose where and how that impacts the market. It is a little bit surprising that this Monday morning, it doesn't seem to have concerned the oil markets too much. Perhaps they'll change their tune in the next few days. Thank you very much, Richard Radoglia, sitting in jolly California, Peter McGuire sitting in jolly Sydney, and Omar Najia sitting in rave Dubai. We'll get rave above jolly. Thanks, Omar. Have a great week, everybody. Catch up with you every morning, 10:30.
Cheers, Sean. See you later.
Enjoyed it.